Hello and welcome to Analyst Insights. On this program, we are discussing all issues, business, finance, and investment, with our major focus being on our local capital markets, mostly focusing on developments on the Zimbabwe Stock Exchange and the Victoria Falls Exchange. So today I'm joined by my colleague Rufaro to discuss all these issues. Welcome to Analyst Insights, Rufaro.
Thank you for having me, Ranga.
Good. So to get us started, maybe let's just dive straight into what has happened in the last few weeks on the market. I'm just looking at the stats here, which are showing that by end of the year 2021, the market capitalization in US dollar terms was sitting at 6.8 billion US dollars.
Using which rate?
If one was to use a rate of 195.
Okay.
At that point, the auction rate was 108. And we saw the market actually retreating quite significantly to a point where right now, as at the 5th of July, the market is sitting at a market cap of 3.4 billion US dollars if you are using a rate of 680. And during that time, the current rate on the auction is about 380. Maybe let's start there and maybe just get some views from you. What was the major driver? What do you think has been the reason for this massive value erosion? I think almost the market halving in a space of about 6-7 months.
So I think it's important to put it into context. The market hasn't halved in nominal Zim dollar terms. If you use the parallel market as your exchange rate to value it in US dollar terms, then you've seen some massive value destruction. And what's my view is that what has happened over the last 30 days or so is that money supply growth has continued, which has affected the parallel market, which by its very nature is unregulated. Whereas the stock market, it's a regulated market, and the perceived regulatory risk changes the appetite of participants on the buy side. So we had some policy action regarding the stock market where there was an initial indication that there would be a 40% withholding tax. Although this didn't materialize, eventually it was adjusted to a 3% withholding tax. The 40% was a capital gains tax, not a withholding tax. It was eventually they eventually adjusted the withholding tax on sales of shares that were bought within 270 days from 2% to 3%. But that spooked a lot of market players. So ordinarily, there's a cohort of investors on the buy side of the local bourse that when they have a lot of Zim dollars in their positions, were quite comfortable to allocate them to the ZSE, because the ZSE is firstly a good place to ring fence Zim dollars from inflation, but secondly, it's also 100% legal, unlike the parallel market, and it doesn't have the risks of counterparty default, and the security risk also associated with holding significant amounts of US dollar cash. So for a particular cohort, the Zimbabwe Stock Exchange made a lot of sense to park value. But when you have these policy announcements that spook investors, because the concern is, well, if the stock market keeps tracking inflation at this rate, it's going to be a target for regulatory action, and I might not be able to liquidate my position as and when I need to at the value that I hope to achieve. So that dampened demand. So I suspect that these players are spending more on the parallel market and spending more in property or in their own businesses, buying inventory, buying other asset classes that also are ring-fenced against inflation, but avoiding the stock market, because the stock market is now perceived to have higher regulatory risk. So that's what I think is happening. It's not so much that the outlook in terms of the listed companies, their revenue growth, their earnings has changed. It's just that as an asset class, the regulatory risk is perceived to be much higher. So it's not such a great destination to park value. So I think that the investors with a slightly longer term perspective, so people who don't necessarily need to be able to access their positions in 90 days or 180 days, people who can hold for a year, 3 years, 5 years, I think at these valuations, the market is a steal. I think for the longest time on this show, we've been saying, look, we think the market is overvalued. But in terms of the underlying assets at this valuation, notwithstanding all the problems that we have, the market is very cheap. It just requires an investor with a longer time horizon in terms of how long they're willing to hold.
Yeah, which is very interesting because so market it below 3.5 billion is pretty much where it is, maybe in terms of the long term. If you look at the 5 to 10 year kind of horizon, that this market is average around 3.5 billion US dollars by way of market cap, and it's actually a trend which was only changed maybe in the last 18 to 24 months, when you started seeing the market actually being comfortable above 6 billion and even testing levels around 10 billion US dollars. But I would want to then really get some clarity from you. So you're talking about the investor who is parking their money on the stock market. I suppose this is not your typical institutional investor who has got maybe some long-term liability that needs to be covered by proceeds of investments that are made today. What does it say about the structure of our market right now? If what you're saying is true, that the market has actually retreated on the back of a certain kind of entities on the buying side who have got options to deploy their funds on other avenues, for example, on the power market, because we know your typical institutional investor, they don't have
that option. Yeah.
That option. So what does it say about the makeup of your typical investor on the market, and how did we end up here?
Well, I think institutions that don't have a lot of options, and they would likely be the ones buying in this environment, because from their perspective, the market hasn't been this cheap for several years. But I think that a lot of the money supply growth happening in our country at the moment ends up in the hands of smaller businesses that are not necessarily regulated institutions, where the managers have other options. So they can buy property, they can buy inventory in their business, or they can buy currency and keep it in a safe. So I think to the extent that they, to the extent that they are concerned about being on the right side of the law, a lot of them would have opted for the ZSE. But if the ZSE has challenges where it's unclear, what the regulatory environment is going to look like in 30 days or in 90 days, then it's no longer such an attractive destination, and those players will be tempted to store the value elsewhere. So that's it's a regulatory and confidence issue. I think that if the policymakers were more consistent in terms of once a policy is announced, the entire market has confidence that that's going to be the policy for the foreseeable future, and it's not going to change unless the circumstances in the economy change significantly. Then I think this wouldn't have happened. But unfortunately, there's been so much policy changes that it has eroded confidence that the market might be cheap today, but what if it's closed in 30 days Or what if that capital gains tax of 40% is revisited? Nobody can answer these questions with high conviction because the policy environment is constantly changing.
So interesting. So talking about the asset classes, in the last week or two, we saw the central bank, the Reserve Bank of Zimbabwe, announcing a gold coin, and I suppose that it also adds to the asset classes that we're going to be having going forward. And one of the reasons that was proffered for the introduction was it will then offer an opportunity for people who want to preserve the value of the US dollars, of the Zim dollars, and maybe some of those people that would resort to such unloved options such as the parallel market and also maybe sometimes on the stock market. I think there's still more to come in terms of the modalities, how this or the coin is going to be bought, handled, and etc. But maybe based on the information that is already on the public domain, what's your reaction to that? And would you put your money there?
So I think based on the information that's out there in the public domain, this coin as an asset class is dead on arrival. The reality of the matter is that we have a local currency, the Zim dollar, and since it emerged, the issue of this currency, our government has made certain promises and commitments about how this currency would hold value and behave. And unfortunately, the commitments and promises by the issuer and what has happened on the ground, there's a massive disconnect. Okay. So there were commitments and promises that this would be a stable currency, that people could save in it, that inflation would be managed, and this has simply not panned out.
Okay.
So, and that's why people don't have faith and confidence in the Zim dollar. Okay. Now, with coins, funny enough, 2,000 years ago, the Roman Empire collapsed because they kept debasing their currency, which was coins. They replaced gold with base metals until the coin was 90% base metals and 10% gold, and people lost confidence in it, and that's how the empire collapsed. And so it doesn't matter that you say that it's a gold coin and it has X amount of gold. People must have faith and confidence in the issuer. And the issuer has already got a long track record with the Zim dollar. And effectively, a coin is another currency. It's just got a different physical manifestation, that it's a coin. But the average person has to take the issuer's word for it, that it weighs X amount, and of that weight, Y% is actually gold. And that this is not going to change going forward, that maybe the coins issued today are going to have as much gold as the coins that are going to be issued in 3 months and in 6 months. And people, so it's a faith and confidence issue. And the issuer, in terms of credibility in the market, does not enjoy significant credibility. So if you are then an investor who does not have faith in the Zim dollar, it's hard to imagine why you would have faith in the gold coin. So I think that unless there's some sort of regulatory regime which forces certain institutions to allocate some of their capital to gold coins, I think for the most part the market is going to shun it.
Yeah, well, to our viewers, there's still a lot of information that still has to come out in the public domain regarding how the coins are going to be traded. Already, some people are asking on whether, since there's an option to buy these coins using local currency, what rate is going to be used. So if we are going to use the auction rate, is it not going to create arbitrage opportunities, obviously, given where the rate is right now? which is probably around half the rate that you find on the parallel market, and also some questions or worries or concerns about whether there's not going to be a coin implied rate, which, as you would know, the implied rate issue was one of the reasons that was cited for the suspension and of Old Mutual and PPC on the local base. So there's still a lot of information that's missing that would be keen to discuss in future episodes. Maybe just to, as we are wrapping up the show, I just want to get your reaction to another policy announcement recently around the legal tenders. So I think just before that, there was really some edginess on the part of other market players after there was the newspaper reports that a new economic policy was going to be announced. And I don't think many people really expected the announcement that the US dollar has now been re-established again as a local legal tender alongside the ZWL, which means it's no longer illegal to be charging and collecting US dollars. What do you think are the immediate and long-term effects of that, maybe on businesses, and also maybe when you look at our local capital markets?
So I think this one is a distinction without a difference. Basically, it was actually legal to hold US dollars and quote in US dollars. It was just legal in terms of a temporary presidential powers act,
regulation.
So so basically the legality has simply changed into law now. But on the ground, in terms of what does that mean for somebody, a retailer or an individual, in terms of how they transact with US dollars, nothing has actually changed.
Okay.
So the real challenge that's there is the exchange rate, because it's still problematic in terms of how you are quoting your prices. There's an official rate, and you can still get into trouble if you're seen to be quoting at an effective exchange rate that is not the official rate. So nothing on the ground has changed. It's just a legal change. Some people will welcome it because making it law means it's more permanent. But I think in this environment, we know that even laws can be changed in a heartbeat. So to me, it's a distinction without a difference.
All right. So maybe as a follow-up to that, so clearly the economy is moving closer and closer to full dollarization, and we already are seeing, even in terms of the policy environment, the issue that we've just discussed, and also the recent numbers from some of the big corporates, which are showing that maybe 60–70% of their revenues are now in US dollars, and some of them are going a step further to actually pay dividends partly in US dollars, because that's the cash in which they are collecting it. So what would you expect? What should happen to the local base, especially the ZSE, Zimbabwe Stock Exchange, which represents the biggest part of our market capitalization if you combine the two? Isn't there scope for the market to be dollarized? Surely if the listed companies, they are generating 60–70% of their revenue in US dollar currency, doesn't make sense for trading somehow to be also in US dollars and deal with this whole issue, this whole allegation that come every now and then, that the ZSE is actually a haven for speculators. So the underlying business is already generating US dollars, and the economy itself is already moving towards dollarization. Doesn't it make sense at some point to say, from this day onwards, the ZSE prices are going to be quoted in USD, and what will be the impact on the tradability and the attractiveness of the market?
So I think, obviously it will be better for the capital markets as a whole to dollarize. Even if you look at it from the government's perspective as a stakeholder in the capital markets, what it would mean for them is that all the taxes associated with trading on the Zimbabwe Stock Exchange, they would be able to collect them in hard currency. And I believe they would be better off if that was the case. But I think that for whatever reason, there is commitment to hold on to the local currency. And notwithstanding that the market prefers US dollars, and there isn't any indication that this commitment or the thinking around this is changing. So for as long as we are in that paradigm, I don't see a scenario where companies will be able to be dually listed on the Zimbabwe Stock Exchange and the Victoria Stock Exchange, creating an effective implied rate, which might not always be official. So this is the problem that Old Mutual had. The Old Mutual implied rate created a perception wrongly that it was driving the power market rate, and that this is why the authorities suspended it, and it's not trading. So in as much as I think your suggestion that as the rest of the economy dollarizes, the local best should also dollarize, I don't see it happening in the current regulatory framework, unless there's a sea change in the thinking around, dollarization.
Thanks so much, Rofaro, for those views. That was all we had today. And to our viewers, we want to hear from you on the issues that we have discussed today, and also other issues that are topical in our economy and also on our local capital markets. And especially, we want to hear from you what you think of this market capitalization of 3.5 billion for the entire ZSE, given that only end of last year the market was nearly 7 billion. In fact, this year the market peaked very close to 10 billion US dollars. Do you think right now the market is correctly valued or correctly priced, or maybe there's scope for re-rating upwards? And where do you think is the sweet spot in terms of the market capitalization of the Zimbabwe Stock Exchange? So remember to share these comments on our social media platforms, and like our Facebook page on ZFN Capital, and also our YouTube page on ZFN Capital. Otherwise, see you next time, and bye-bye for now.